Hello, once again. Well, it's the final time. It's the last time now. So this is the last video where we're going to talk about the wages and channels, rising wages and rising wage, falling wage, bullish channel, bearish channel. We're going to combine them because they're almost similar in the way you trade them and their structures. So we'll just combine the wedges and the channels, beginning with a rising wedge. Wedges can be used or wedges can be both reversal and continuation pattern. So this pattern here can be used both as a reversal and as a continuation. But in this section, we'll just focus on them as reversals. But you can use them as continuation, applying the same rules. The following examples will be focusing on wedges as reversal patterns. As a rising wedge will form, particularly in an uptrend, signaling an end in the current trend. It will form a wedge shape sloping up with ascending highs and ascending lows. So as you can see, it's sloping up, but going up, but at the same time creating higher highs while it's narrowing towards the end or towards the apex. So it will be something like this. The bullish momentum loses its strength as the market enters a period of consolidation. As you can see, it loses strength. The consolidation can last for a few minutes, hours, weeks, months, and even years, depending on the time frame you are using. So it will be a structure like this, creating higher highs and higher lows, but narrowing towards the end. This will be an example while price is reacting to a previous resistance. Now, in the above figure, a rising wedge formed on USD CHF H4. High odds rising wedge will form as price is approaching an old resistance, as you can see here. The rejection on an old resistance will add confluence to a possible price drop. Generally, we'll calculate the length, the number of pips moved from the first low to the first high of the wedge. So from this first low to the first high, use that as your high of the wedge and see how many pips you have from the first low to the first high, or maybe from this high to this low, number of pips. But normally take from the low to the high. If this is the first low and that's the first high, then check the number of pips from this, then that's how many pips is going to go down, and that's how many pips you are targeting. Generally, we'll calculate the number of pips moved from the first low to the first high. The same number of pips will be used to mark our target price as seen on figure 5.2. So as you can see on this figure, we use this number of pips as our target. Entry point for a sell will be after a true breakout candle on the rising wedge. So we need one candle to close above. We don't need to consolidate away as long as it closes below. Then we can sell on the next one. You can also wait for a retest of the broken trend line. To add more confluence on this pattern, we add RSI to find divergence. As the market price is approaching previous resistance, it will keep on creating ascending highs. However, the RSI will show that the current bullish momentum is losing strength by creating descending highs. The RSI settings are set to MT4 default settings. So this is our RSI, the relative strength index. It's on indicators and is it trend? No, oscillator indicators. So you have the market going up to retest this previous. So what this does, it's a relative strength index. It tells you the strength. Okay, but you do not trade it. We use it to find more confirmation or confluence. We do not use it to base our trades. We use it for confluence. So normally when price is going up, you look at the high at the highs. of the market, if the market is going up, it will create higher highs here and also create higher highs on the RSI. As it goes down, you look at the lows, it's creating lower lows and it's creating lower lows here. But as soon as it does something like this, where it creates lows here and creates highs here, look, lower lows here, higher lows here. This is a sign of a reversal. Price might change direction. Okay. And as it goes up, it creates what? Higher highs. But if it does like this, creates highs here, and then it's dropping this side. This is a sign of a reversal. So we use this now to confirm with our wedges. If you have a rising wedge and price is going up, creating higher highs, but it's creating lower highs on the other side, then there's more confluence that price is gonna continue going down. Take stop loss is gonna be on the above, on just on the above support or resistance, just above that break here. Maybe just look for a zone here, then use it as a stop. If you have such a long candle like this breaking the trend line, probably you would have missed this trade because it's, look at this. The risk is, there's too much risk here for you to take a trade here. Probably if it closes somewhere here, then you can enter. But this one, there's too much risk from the entry point. Then you have a falling wedge, which is an opposite of a rising wedge. It will create lower lows as the market is going down, but also narrowing towards the end of it. As it breaks here, it will move the same number of pips as this. Also at RSI with this. Here's an example of that falling wedge. It should be reacting to a previous level of demand or to a previous support for you to take a trade. Well, with this one, I'm not too sure if it was reacting to a previous one because I do not have that data that side. But if you are going to trade this, you should use your first high, first low, check how many pips this is, then you will use that as a target. If this, for this instance, it was 180 pips from this going up. We're just going to move on to the channels and then we'll go and look at all examples on MT4. Channels are the same as your wedges, exactly the same. It's just that they are moving in parallel, creating higher highs and higher lows, but they are not narrowing towards the end. They are parallel like this. They can't be steep or can't be like this. They can't be steeper than this, but this is what it will look like. Break off this again, trade the same. You'll see how many pips this is, then that will be your target. The same as your rising wedge and falling wedge, but it is parallel. You're creating parallel lines like this, and on the break, you sell, see how many pips this is, and then that will be a target. You can sell on the breakout or on the retest. Also, add RSI with this. Now you have divergence here. You can see price was reacting to that previous zone that you have here. You can put a zone from this to that and have a level there, or just leave it like this. So as it breaks, you will count the number of pips from this to that, from A to B, then you'll use it as your target. Also, as you can see here, at some point, divergence will happen like this. It's not diverging all throughout from that first high to that low. It's just towards the end. Look at this. This is high. This is higher than this, and this is lower than this. So, but you will have to train your eye to see this. That's a bearish channel. Sees like this. Also, it will do like this on the RSI. The lows will be going up. Look at that, the lows are going down here, but the lows are going up here. Then on the break of this, you can expect a move that will be equal to the number of pips here. Then you can look at some examples on MT4. I have CHF JPY on H1 going to react to that previous supply or resistance level. And then as it goes back to retest, what is it doing? Creating this rising wedge. Here is your rising wedge. And you can see as it goes up here, it's going down here. Now, this is a good sign. Then it means if you're going to sell, you will count the number of pips from your first low to your first high. Then after the break, this is what you're going to use as take profit. Maybe for stop loss, open with line charts. If your entry point is going to be after this break, use closest. This is your stop. And this is your take profit. So your entry point should be somewhere here, your stop there, and that's your take profit at the bottom. There is another example on and the DUSD price is going up on this time frame, reacting to this one. It hasn't started dropping as yet, but you can already predict a drop because it has already broken out of this. So now you're looking for this number of pips as your target from that break. So somewhere here it should be maybe going somewhere to this price here. But if you're not convinced about the steepness of this, you can also use it as a channel. And so you're gonna wait for the break of this channel because I saw like there's some sort of a channel, but it hasn't given out a clear breakout, or it just gave out breakout. Then you will check from first low to your first high. This will be your target. So it should be somewhere around there. USD CAD also is the same thing. It's a falling wedge though. It's a falling wedge going to retest this one on daily. The lows are going down and they're going up here. So just broke here, should have a target at up around this. There was one on H4 which just hit TP. This one. And you also had this on the RSI going down here, going up here. As it breaks, you target this, which means your target was going to be here. Okay. Okay, that will be all for Wedges channel and channels. And thank you for the series. I hope it has improved your understanding of the market structures and the chart patterns. Thank you.